Hello everyone and welcome to our Trader Talks videos with myself, Richard Perry, Market Analyst at Hantec Markets, and every week I'll be speaking to Steve Miley, the Market Chartist. Hello Steve.
Hi there Richard, good to be back again.
Yeah, nice to have you again, Steve. We had a good chat last week, and certainly seems as though our beards are getting longer in this lockdown period. A little bit grayer as well. These markets are going to do that to you, I think. But hopefully we can come up with some good trading ideas that will give a few pointers in terms of where the markets are going to be going.
Yeah, let's hope so. I mean, we saw from last week, markets were kind of somewhat range bound. You've used the term, I know, seesawing sentiment in here. Markets up and down in here, and it's all around really these reopenings from lockdowns, the kickstarting the economies in various European nations, and on the backdrop of then, is this going to work, and is there that potential wave?
I think that these lockdown recovery efforts are going to be key for these economies, because already we're starting to see second wave infections going up, and obviously we saw the big news about Wuhan, and they're going to be testing 11 million of their inhabitants in order to try and get that back under control again. And how that region responds to those measures is going to be important, because they could well be seen as a bit of a template for other countries. And
sure.
I think we've discussed previously about Germany. They're starting to see waves coming back in, and also the fears that it could happen in the States as well. So it's going to be a really important moment, I think, for markets in this sort of ranging phase that we've got over the past month or so, where stock markets have there or thereabouts gone nowhere. And you can see a lot of the Forex major pairs have also started to develop these ranges as well. There are some important phases, I think.
Yeah, agreed. So we're at these kind of range environments, oscillating within those ranges. Markets haven't been able to re-energize on the upside as, I was looking for them to do in our chat last week. And we've obviously got some key data coming through. Yeah, so we, UK data, GDP data already in here today. We've got that US retail sales data upcoming in here, and also various central bankers. I know you're pointing out earlier how important it could be, depending on what we see from Powell this afternoon.
Yeah, Powell, I think it's going to be important, because there has been a lot of chatter about whether the US Federal Reserve is going to be moving towards potentially yield curve control, and obviously that would be the next step in the dovishness, on the dovishness scale. And I mean, the RBNZ talked about negative rates potentially, so all these major central banks are starting to go even more dovishly again, and that would suggest that they're still really concerned about how these lockdowns are, how the economy is going to recover from lockdown, and the potential of economic downturn coming through again. So it's going to be really important. And if Powell does start to talk about yield curve control, we could see the dollar starting to take a hit, and that could break some of these ranges.
Yeah, definitely. And don't forget, and I know we're going to potentially talk about it, or we can talk about it now, is that oil expiry after the chaos that we saw.
A lot of volatility that we saw last month. And that May expiry for WTI really caused massive concerns throughout futures traders, and I think that could potentially be on the cards again. Very similar technical patterns. Anyone who looks at the charts will notice that Brent crude, for example, I know it's not WTI, but Brent crude, similar rally, coming over the top, consolidation, and then started to fall away last month. We've had the rally, we're now in consolidation, it's starting to tip lower, so that really is a concern for me.
Sure, sounds good. So let's look at some trades, right?
Let's give it a go. One of the trading ideas that I'm really interested in at the moment, actually, I think, is the continued outperformance, I think, of the yen, and I think if you look at that against the euro, then I think that we've had a nice little trading opportunity with this rally in euro yen in the last few days. We had 3 days in a row where we had strong bull candles pulling back into a resistance band that is actually an overhead supply area, 116 to 117 area. And I think that's a pretty good little sell zone now for euro yen, because we've got a downtrend that comes into play. We've had momentum indicators unwinding back to where all the selling pressure has tended to resume in recent weeks. And I think that 116 to 117 is a really good selling area for euro yen. I can see that this trend line is going to continue, and I think it's going to pull back towards the lows at least of 1440 once more. In terms of stop areas, you'd probably be thinking about the reaction high of 117.75 being key. But yeah, certainly I think resuming that downtrend lower.
Yeah, and I'd agree. Yeah, I mean, I think the big thing here is you mentioned about the yen strength in this kind of slight shift to risk, a risk-off scenario. But then we've also got the fact that the euro just trades awful, and let's face it, the European economy has been significantly damaged by all of this. We have various issues. We've already mentioned there the fact that we've got cases coming back, a second wave potentially. Germany, so that's all putting negative pressure on euro. So do you think we can go deeper than that 114.40? Where can we get down to?
Well, I think 114.40 is an initial target, because that essentially was just the rebound, the support from the rebound. And I think that ultimately, if now it's broken this 116 to 117 barrier to the downside, I think you could easily see sort of 112 area, which is a key multi-year low as well. So I think that would be where you'd be looking at.
Yeah, certainly one to watch.
Yeah.
So, Richard, now I'm going to take a look at the pound versus the Australian dollar. But rather than looking at the pound versus AUDUSD, first of all, we're going to break it down into the majors. We're going to look at pound US dollar cable, and then we're going to take a look at the Australian dollar against the US dollar, and then put it together and see what pound Australian dollar looks like. So we're going to start off here with cable, GBPUSD, and we're breaking down, getting very close to that important support, that interim support. We have 122.45 between the two peaks in here, set in April and early May, and a breakdown through there, remember, triggers a double top pattern. We've got then some important support below there, retracement and chart support, 121.71, 121.65 area, and through these kind of supports will certainly signal a far more bearish theme. I'm certainly looking for a break through that 122.45 to trigger that double top, to see us extend significantly lower for the pound versus dollar.
Yeah, I think just looking at sterling at the moment, the price action that we saw yesterday really did give me cause for concern, because dollar was weak across the board yesterday, but sterling was even weaker, and that really did, I think, raise a few red flags for me. And I think that the fact that we've bounced off that support at 22.45 area this morning on that GDP upside surprise, I think is a little bit of a miss move, really, because I think you're going to see some downward revisions to that GDP number anyway. And I think that you're going to see this ongoing struggle for sterling. You've got the EU trade talks, which are going to be really tough throughout this year. The UK lockdown is not really progressing all that well. So I think that the sterling price, I think, is going to come under pressure generally, and that, I think, on sterling dollar certainly puts these supports under real significant pressure.
Yeah, sure. And let's take a look at the other leg. Let's take a look at Aussie versus US dollar. What do you see there?
Yeah, I think if you take the fact that the Australian dollar is actually one of the best performing currencies of the moment, really, I think, and it still holds up very well on a relative basis, and I think on the chart basis it's holding on to the pivot line which has formed in the last month or so. So I think that generally going sideways, and the Australian dollar hasn't fallen away in the potential that it could have done. So I think that it's holding up well, and that bodes well, I think, for your short position that you're thinking about on sterling Aussie.
Yeah, I would agree. Aussie dollar versus US dollar certainly at worst is kind of sideways. For me, it's got a slightly positive spin on it, and that just runs us into sterling versus Aussie, GBP, AUD, and here looking negative. We did get that rebound in here off of in here 190 back at the end of April. We got that rebound, reversed up through the trend line, and it looked like that was going to be a more positive spin for sterling Aussie, but it's given all that up again in here. We're back down through that 190 level in here, and that opens up real downside for me, maybe as deep as down to that swing low that we have going all the way back to last year, down at 185.47. There's real risk we could get more of an acceleration, and as you know, when this thing moves, this can really move. 5 big figures for this over a week is not unheard of.
Yeah, just on a basic technical basis, the moving average that you've got here is a 13-day moving average. It seems to be hugging that once more as a basis of resistance, and you've got the momentum indicators which are negatively set up. So anything sort of seemingly as though that any technical rallies, I think, are selling opportunities now on sterling Aussie. Yeah,
agree with that one. Looking lower.
Yeah, so some good charts, I think, but sterling Aussie is definitely one that we're going to be looking at, I think, on the downside. Well, thanks a lot, Steve. That was a really good chat again. Again, we're going to be looking at more things next week for traders to get their teeth into. Obviously, key moments in these markets, and we hope that we're providing some good information for you. So thanks a lot, Steve, and we'll speak to you all next time.
Thanks, Richard.